Good morning, everybody. Hey, welcome to Monday, December 14th. Hope you guys had a great weekend. I'm sure you're trying to get that shopping done before Christmas. A lot of stuff as we wind down this quarter coming out this week. So last week, though, was really kind of the first down week we'd had in a little while overall, as you can see right here. And I know Dave will discuss this a little bit more when he comes online here in a little bit, but you can see for the week, the S&P was down, NASDAQ was down, and the Dow was down. So everything was slightly down last week. The question is, can we rebound off of that today? And what will that look like? Let me remind you, the one thing that you can control is risk in your portfolio. People too often don't know how much risk they really have in their portfolio. That's why I designed the financial x-ray to determine how much risk you have in your portfolio to make sure it lines up with your risk tolerance so that when the market declines, you're not going crazy and upset about what's happening. You understand that it's within your risk level. Hey, to schedule your no obligation financial x-ray, give us a call at 863-382-0037. And we got Dave coming up next.
Light FM, always something there. I still remember Dionne Warwick's version of that better because I'm old. It's 8:40 here, 20 before 9. Time to check in on your money and find out what's happening on Wall Street. Honest to gosh, the way things are looking so far today, not a lot, but things are looking relatively green early on. Let's check out Statler Financial Services' very own Phillip Statler. Phillip, good morning. How are you today?
Hey, good morning, Dave. Coming to you from the house this morning. I've got, again, a week of continuing education and planning for 2021. So I'll be working mostly from the house this week, a few trips to the office, but glad I'm able to do it from either place.
It's wonderful when you've got electronics hooked up and ready and raring to go. Setting up the week ahead of us here, Friday ended up being one of those mixed bag days. The Dow eked out 47 points extra on its balance. NASDAQ was off by about 28, and the Standard & Poor's was off by 4.5. But yeah, compared to what a normal day is, that pretty much looks like a routine day, doesn't it, Phillip?
Well, it does, but let's bring this point to light because we hadn't seen this in a while. We had a negative week last week across all three indexes, even though we hit and closed at some record highs. We actually had the Dow down 0.5%, NASDAQ down 0.7% for the week, and the S&P 500 was down almost 1% for the week.
And you got to give that the backdrop too. As the Dow is still over 30,000, the S&P is still over 3650, and 3650. It's 3663 this morning. If you can lose money for a solid week and still keep nosebleed levels like that, I won't say overvalued, although I know a lot of analysts are, but it certainly gives you an idea that our trading volume and our trading numbers have definitely been up for the last month or so.
Oh, definitely. Yeah, we have seen obviously record highs last week even. And so we've seen that kind of week over week, at least the last 2, maybe even 3 weeks. So, you expect to give back occasionally, and that's probably what happened last week.
Absolutely. That kind of goes into something that you and I were chatting about before we went on the air. If you've got a 401k or an IRA with a lot of mutual funds in it, those mutual funds have certain percentages that they guarantee they'll keep you. Now, if you've got a 60-40 mix of stocks to bonds in your mutual fund, and that's what they say they're committed to, over the last couple of months, it's gotten a little out of whack as the stock values have gone up, hasn't it?
Yeah, it really has, Dave. And people don't realize that is that when you have a balanced mutual fund, the prospectus determines what the fund manager has to do. And so a lot of those require a 60-40 split. And we've seen stocks go up and we've seen the value of bonds go down. And so sometime before the end of this quarter, there's going to have to be a rebalance. And mutual funds aren't the only ones. You have pension funds kind of have some of the same mandates. You have endowment funds that kind of have the same mandate. And so those all are going to have to rebalance between now and the end of the year. And the article I was reading said that could be $160 billion of selling that needs to happen in the equity market.
Every bit of good news comes with a little bit of bad news. So if anybody watches the market and likes seeing it going up a little bit every day, those blue chips especially that are kind of the stock and trade of an awful lot of portfolios could see a dive, and it doesn't necessarily mean anything bad's going on. It just means the mutual funds and pension funds are getting back into balance where they should be because we've bought so doggone many of them.
No, that's right. So they're having to rebalance, and what that does kind of mean, though, Dave, is that we're going to see more volatility, and that volatility most likely is going to bring the prices down because there's not enough buyers in the market to pay the existing price. So what's going to happen is the price will start to go down, which then intrigues investors to get back in at a better price and buy what people are offering to sell.
Yeah, the other side of that, too, is I suspect that as we buy more bonds in order to make up the difference, the interest rates are going to end up going down, too, because if we buy more bonds, yield will end up going down on the bonds. So we're going to have kind of a volatile market on both sides of that portfolio, aren't we?
Yeah, you're right, Dave. We'll see it on both sides of the spectrum in both marketplaces. So it's just something that folks to be aware of as we head into the end of the year.
So don't worry if your market goes down by a little bit. It might just be the big money guys rebalancing what they could have. It doesn't mean Armageddon is coming necessarily.
That's right. You're right.
The other tidbit we got out this morning is kind of fun. I was on Facebook with a couple of friends out in Nebraska who were having absolute hissy fits because their Gmail went down this morning. I mean, when you look at something as big as Google, you don't expect them to ever get bit, but they had a server farm issue out there. And a good way to tell whether or not your employees have been working bosses is whether or not they're complaining about Gmail or YouTube having gone down, because both of them were down this morning for a little while.
Yeah, they were. I think if memory serves me, it was about 6:30 this morning Eastern time that happened. That they had that issue that did affect Gmail, affected their Google Drive, and affected YouTube. So people don't realize that YouTube is owned by Google. So they are that is got them trading down about 0.5% this morning.
Oh, gosh, I'm surprised. Folks don't realize that a whole lot of local email services, too, use Google as being their server. Like a lot of the local email services are actually just shells for Gmail using their domain names. So that messed up a lot of local ISPs as well for 3 hours this morning. That actually is a pretty big deal. And I said to a friend on Facebook this morning while she was complaining, I said, don't worry about it. It's a cinch. They're panicking a lot more than you are right now.
Yeah, that's true. But we have become to rely on that. And so when a little hiccup like that happens, it gives you pause to consider, okay, where else is that information in case they can't get back up and running quickly? We rely on that server pretty big.
Oh, yeah, and the downside is internet is reliable these days, and internet server farms are reliable these days, but they haven't quite hit the reliability of running water yet, have they?
No, not quite. And even, water can have issues, right? Just ask the guys in Tampa.
That's right. I've been kind of surprised I haven't seen a ripple about that. The entire city of Tampa on a boil water notice, and we complain when it happens in our neighborhoods once in a while.
Hey, one of the things that's really driving the market today is, again, the vaccine. The vaccine will be out and start to distribute this week, I believe. And so on that front, I want to talk about a company called CureVac.
What's that?
They are a pharmaceutical company, a biotech firm in Germany, and they are working on a vaccine also. And so they are starting their clinical trials this week on 35,000 people in Europe and Latin America with their version of the vaccine. And so they're trading up about 6.25% this morning.
Cool, and that's good news for us, even though it might be a European and Latin American vaccine, because it'll free up more of the Moderna and Pfizer doses for us. Because there was a little disappointment we were expecting more than 180,000 doses in Florida, and that's what we're getting of the Pfizer vaccine. So we're all kind of cheering for Moderna to get a quick emergency authorization of the FDA this week and get more Pfizer doses in as soon as possible. So more vaccines and passing clinical trials, the better, I figure.
That's right. Another big thing that happened last week, Dave, and we talked about a little bit, is Airbnb. It went public last week. And so I had a client call me and say, hey, can I get in on that? I said, look, you really, I don't know that's a good idea. Number one, you got to be one of the top people within a brokerage firm to have access to a lot of that stuff anymore. But here's the deal. Airbnb got a double downgrade from a couple different researchers to underperform from buy. So it went down from buy to hold to underperform, all in one fell swoop. And so they're trading down about 2.8%, and they expect it to continue to fall, obviously.
A handful of investors got fat off of that, and a whole bunch of latecomers ended up really getting screwed, didn't they?
That's right. And people don't realize that. You see these high flyers, and, more people lose money than make money.
Absolutely. It's one of those IPOs that ranks up there with DoorDash. It might be a good idea, but I kind of wonder about the timing right now.
Well, timing, profitability, can it maintain? There's a lot of questions on some of these things.
Oh, yeah. Hey, we had a couple of guidance things come out. No reports to speak of this morning as we're between earnings season now. I noticed that 3M, one of the big industrials, was putting out guidance saying that their fourth quarter was going to be just about on track with what the rest of the world was expecting. And you had a tidbit on United Airlines. It's borderline scary, right?
I did. United Airlines, they came back and raised their estimate for their cash burn rate. That's how much cash they're going to go through every single day. And so for the quarter, and this number is just so big, it's hard for me to believe, Dave, $26 billion per day. And that's up by about 15 to 20 million more than what people expected. So, yeah. But for some reason, their shares were trading up early this morning. Let's see what they are now. They're still up 2.3% this morning.
Which once again makes my point that the study of markets sometimes is a study in abnormal psychology, isn't it?
Yep, exactly.
Absolutely. Resetting the table for the morning. Mixed bag on Wall Street on Friday. Looked pretty routine on balance. With the news of the vaccine getting shipped out, we've been hearing that our people here in town, as a matter of fact, in the healthcare industry, could very well start getting first doses within the week. Things are looking fairly good. And at least on my delayed quote, Phillip, it looks like things are looking pretty green this morning, 45 minutes early. How are we doing?
They are, Dave. Everything's looking rosy on the stock index side of things. We've got the Dow up 0.8%. We got the S&P 500 up 0.7%. We got the NASDAQ up almost 0.5%. So everything's looking really good on that front. Not so good on the silver gold front. We've got silver down. Well, it's basically even right now. And we got gold down 0.75%. We've got crude oil heading up substantially, I think, this morning, up 1.6% to $47.32 a barrel.
They're kind of on the top end of the trading range we've had for the last week. It'll be interesting to see if it holds those levels, right?
Yeah, you're right. It will be.
Could be. Overseas markets, mixed bag on the Asian rim this morning. Japan was up. The mainland Chinese markets, for the most part, were off by a tinge. Europe generally is as optimistic as we are about the vaccine. England and German markets are generally up this morning midway through their day. Phillip, you told us that you're doing continuing ed this week, but I know we can still make contact with you. We talked about the potential for volatility in the marketplace from the mutual funds. That means insuring against that volatility in my retirement account gets real important. How do I make contact with you?
Then give us a call at 863-382-0037 to schedule a financial x-ray. And you're right, I am in continuing ed, but I still have some times available every day, morning and late afternoon. So don't let that keep you from giving us a call. Check out our website, statlerfinancial.com. and there's a link there. You can actually click and schedule your own appointment. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And again, back here tomorrow morning on Light FM. Phillip, thank you so much. We'll catch you tomorrow, all right?
Sounds good, Dave. Thanks.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today as we get ready the week before Christmas week. So a big week when it comes to shopping and holiday sales and that type of stuff. But have a great day. I look forward to speaking to you again tomorrow.